Join us for our weekly wrap-up. Rather than Mark Wenzel from the Hopkins Group, is his colleague Jacob Eliopoulos, who's filling in for Mark while he's away for the next couple of weeks. Welcome, Jacob.
Hi, Michael. How you going? Nice
Good.
to be here this morning.
Likewise. Now, it's been another interesting week with the collapse of Silicon Valley Bank continuing to send shockwaves throughout the US and international markets. What are the ramifications?
Yeah, well, on March 15th, which was about a week ago now, Credit Suisse stock slumped when the chairman of its largest shareholder, Saudi National Bank, ruled out investing any more into the company. Credit Suisse then sought a public statement of support from the Swiss Central Bank. The cost of insuring the bank's bonds against default for 1 year rose significantly to levels not witnessed since GFC. In another sign of stress, Credit Suisse's additional Tier 1 bonds, which are subordinate to other ranks of debt and may be written down if capital falls below the predominant level, were trading below 80% of its face value, a level typically signaling distress. Even bonds maturing in April traded at prices well below their face value. The fall in Credit Suisse has brought UBS, Swiss's largest bank, to take over as part of the government bank cut price deal. UBS is asking the Swiss government to cover about $6 billion in legal costs and potential future losses in any deal, and as many as 10,000 jobs may be cut worldwide if the two banks combine, which is looking very likely at the moment. UBS is looking to buy them for circa 4.5 billion, which would be half of what the bank was worth at this closing trading day on Friday. The deal could bring an Australian wealth management arm to UBS, which has been out of the local private banking space since 2015. Even though the restructuring will come at a material cost, UBS is better placed than Credit Suisse to absorb this. The main challenge for UBS will be to keep revenue attrition to a minimum during the restructure. On the other hand, the future of Credit Suisse's international bank is less clear than given the UBS is market leader in the mergers and acquisitions and capital markets. So this will put the jobs of 60-odd investment bankers at risk. Regulators stepping in has brought some kind of calmness to the market, and as seen in the last few days where the market's bounced a little bit. But yeah, overnight the Fed obviously raised some rates and the market's dropped a bit more.
Yeah, 60-odd investment bankers losing their job. I can't see a lot of sympathy for them at the moment, but we'll move on now. There's talk about the RBA considering pausing on their April 4th meeting for interest rates. Is there any validity to that speculation, Jacob?
Yeah, just touching on last night as well with the Fed. They did raise about 1/4 point last night. Markets were implying the potential of the rates at about 0.25 percentage point to keep that target between 4.7 and 5%. But traders, on the other hand, were thinking there could be a potential for a hold. Just with everything that's going on and the collapse of the Silicon Valley Bank, policymakers were poised to potentially beforehand raise rates at about 0.5. But yeah, as we saw last night, they've dropped it to 0.25. So then going on to the RBA and the meeting, which will occur at the start of next month on Tuesday. The RBA board will consider a pause on further interest rates at its April 4th meeting, potentially sparing borrowers from an 11th consecutive increase as it assesses whether it has done enough to tame inflation. The minutes from the March 7 meeting reveal that the board will consider keeping the cash rate on hold at 3.6% at the next meeting if the market shows signs of softening. RBA board meeting in March occurred before the markets pared back expectations of further rate rise following the failure of the US Silicon Valley Bank and the takeover from UBS and Credit Suisse. A pause would not preclude further interest rate rises in the coming months if evidence emerged that the economy remained too hot. The minutes showed that the board's review on employment, inflation, retail trade, and business conditions as pivotal to whether rates will be left unchanged next month. 2 of the 4 data points have since been released and were stronger than expected, with the unemployment rate falling below near a 50-year low of 3.5% in February, and surveyed business conditions remain close to historic highs. Markets expect that central bank to keep to hold rates next month, but there are some economists that are saying that it could be a 0.25% increase. So there's a bit of people are thinking that it could go on hold following all the noise in the US, but there's a lot of economists saying that we could get another hike.
Yeah, is there a collective noun for a group of economists that agree, or is it just pointless because no such thing seems to exist, Jacob?
Yeah, I think I agree with you at the end there. It's fairly pointless. I think so. Yeah, you get a lot of different opinions as well, so it's hard to really pinpoint it and say what will happen as well.
All right, and the former CEO of Fortescue Metals, old Twiggy Forrester, has made a pretty impressive takeover bid. Yeah,
he's back in the news. Andrew Forrest, the former CEO of Fortescue, has made a $760 million takeover offer for Mincor Resources through his privately owned company, Wyloo Metals. The bid is valued at $1.40 per share, which represents a 35% premium on Mincor's closing price on Monday. Wyloo already owns about 19.99% of Mincor, which is a key supplier to BHP's Nickel West business. Mincor suffered a loss of $54.7 million in the last 6 months, and while it has an offtake agreement with BHP, it only covers part of the production from its underground nickel sulfide mines. Wyloo's offer has caused Mincor's share price to jump 42% to 1.48, with the Reserve Bank of Canada's analysts describing the bid as opportunistic. While a rival bid from BHP is unlikely, there is a possibility of IGO showing interest in the takeover play. Wyloo's strategy behind the bid is to invest in developing mineral projects that are necessary for the rapid decarbonisation of the global economy, which is very hot at the moment, and especially with what Andrew Forrest is trying to do with ESG. Mincor shareholders should be excited about the offer, given its attractive value, and particularly given the risks at the moment and uncertainties associated with being a shareholder prior to this bid came into play. So some good signs there for shareholders.
If we had any indication whether the shareholders are on board for the takeover, or do they think they should hold steady and see who's going to take over it?
Yeah, it's a bit split at the moment. I think they're not too confident with what the company's done in the past. So there's not a high confidence level with the board and making those decisions. But look, Mr. Forrest has done well in the past, and I'm sure that he can definitely add some value to the company. So there is some good signs there. But like I said, it's almost a 50-50 split at the moment between shareholders.
Yeah, and the pejorative description of the bid as opportunistic, isn't that exactly what's meant to happen? There's an opportunity here and we should seize it. Exactly
right. They've made it pretty clear for shareholders there. So whether they take it up or not, that's another decision. But hopefully, and I think it'd be good. It'd be good for the company. They've taken a massive hit lately, lost a lot of money, and it's probably a bit of a get out clause for them. And for Andrew Forrest to put in a bid, there's obviously, he sees some potential there. And with all the ESG noise that's going on at the moment, and decarbonising the economy and everything like that, I feel like it's probably a decision that they need to make. Yeah, and Andrew Forrest is definitely putting his money where his mouth is when it comes to new energy sources and trying to decarbonise. All right, Jacob Eliopoulos, there you go, I got it right. First one under the belt. Look forward to speaking to you next week when we come back for the market wrap. Perfect. Thanks, Michael. Have a great day.